Joining me on the desk is Miguel Azevedo, who is head of Citi's Investment Banking Division, Africa, ex-South Africa. Miguel, thanks very much for joining me.
Thank you.
Now, you spend 2 weeks a month on the African continent, and you have some very interesting stories, may I say, from on the ground. Let's start with your most recent visit and where that was and what you observed.
Right, well, this last weekend, I was attending a conference in Sharm el-Sheikh, and the conference was effectively an attempt to bring Egypt and Africa together and develop, some business links and connectivity. And you could see that you were dealing with two areas of the world that are going through a lot of pain. So it was one of those conferences where you couldn't really get too excited if you were just dumped there.
A stilted conversation.
Yes, yes.
Do you think that there is potential for flows between Egypt and the rest of Africa?
I think so, actually. I think so. Egypt is a quite developed economy, especially when you compare to some of the sub-Saharan African economies. Very sophisticated, obviously went through a few years of great turmoil. But there are some sizable companies that want to invest in Africa, that want to invest in other areas other than Middle East and North Africa. So clearly is an area for development. And if you look at what Morocco is doing, you would say, why not Egypt, which is a much bigger economy and much more developed on a business sense.
Now let's talk about some of the most talked about areas in the rest of Africa, and let's start with Nigeria. Right. What are you seeing on the ground in Nigeria? There are all sorts of sentiments doing the rounds at the moment, and perhaps the most pervasive one is the fact that the economy is really in trouble.
It's really in trouble, I think. After the election last year, there was a lot of hope. I think a lot of things have been going in the right direction, namely, all the corruption, anti-corruption effort is producing results. The security issues are being handled, or at least in the right direction. What I'm not sure it is going in the right direction is the management of the economy. You have a huge lack of supply of dollars into the economy.
So you've got this foreign exchange issue crisis, effectively.
It's a huge crisis. You have a black market which is nearly twice the price of the legal official market. And in a normal situation, you would have a devaluation. Devaluation gives the right economic incentive. Imports become more expensive. That will trigger local production. So one would assume that would be relatively easy to do. But apparently that's not the view of the administration. They want first to manage the situation from an administrative standpoint, and it's not working, at least fast enough. So right now, very complicated.
Are we seeing the beginning of the end for the Nigerian economy in the short term?
I don't think so. I don't think so. I think very, very strong headwinds. I am still of the belief that there will be some sort of devaluation, even if in a controlled manner. I can understand the resistance to devalue right now. It's basically an oil price play. If oil price goes back to 50, I think Nigeria can get away with a relatively small devaluation, 10–15%, which is not massive. If oil price sticks to $30 over 2–3 years, then it's a completely different story. But the fundamentals are there. The demographics are there. The urbanization is there.
So what is it going to take then for Nigeria to regain its stride?
I think you need to get over the FX situation, one way or the other. And this will take probably 3 months or so. Because right now people are not investing. People don't know what to expect in the future. And this is local and foreign investors. And you start having this creeping into the economy. If you look at the stock exchange, foreign investors are abandoning Nigeria. On the bond side, same thing. At the same time, Nigeria does need to attract foreign investment. So really difficult. You have exceptions, and I can talk about a very good exception, but I think it is an exception.
Is there anything else that we should be focusing on in West Africa? Ghana, we know we've got high inflation, we've got problems in terms of their macroeconomics as well.
I think Ghana got it wrong. They are paying a very high price for that. They lost favor in the market. Since then, they have become a lot more business friendly, trying to recover, but obviously the Shedi suffered massively. I think the place to look in West Africa right now is Côte d'Ivoire.
Yes, Côte d'Ivoire.
Ivory Coast, obviously, a huge catch-up to do. 10 years of internal issues, then 5 years of, or 4 years of the last administration, which was really getting in place, not able to fully deliver. But now we had elections, went very well, very peaceful. There's some unification of the country. The Western world is very supportive. And I think, and if you go back, Côte d'Ivoire has always been a pretty advanced country. Culturally speaking, the society has been very active.
And the African Development Bank now moved back to Abidjan headquarters.
And if you come to Abidjan, and I was there a few weeks ago, it's very different. You can sense the difference. So that would be my #1 spot in West Africa.
And what would you stay away from right now? For the short term.
For the short term.
And I know it's a difficult question because...
No, I think where investors have need to see more so that they come back is Nigeria. But it's also the place where if they get somewhat convinced, they will jump immediately because it's such a big market. But we're talking of the short term is for financial investors, right? Institutional investors, stock market investors. If you move away from that, and you come and look at private equity firms or strategic investors, those they are still affected by what's going on. They are still afraid of a massive devaluation. But
the bottom line, Miguel, is that people want to, investors
yes,
of any kind, want to be able to put their money into an environment. They want to be able to grow that money, but most importantly, they want to be able to get their money out.
Absolutely.
And if you can't get your money out, that's got to be a #1 reason to run away or to stay away.
Absolutely.
If we look at the African continent, Ethiopia seems to be the next bright spot, but it looks as though there's still a lot of deregulation that needs to take place in that economy before it becomes a real opportunity.
I think Ethiopia is the country that is doing best in terms of infrastructure. And for a liberal person like me, it is only fair to admit that the way you need to handle infrastructure has to be the state has to have has to be the driving force there. You haven't seen any country in the world that has developed the sort of the backbone infrastructure with only private money. So they are doing that, and now that is coming on stream, and you start seeing that they already have an industrialization process going. They will be exporters of power soon, and if they deregulate, and that's the big thing now. Once you have the infrastructure in place, you have to give wings to the private initiative so that people can actually start producing. If they do that, I am absolutely sure they're going to be the darling of the market.
How long is it going to take for that story to become a reality in terms of success?
From an economic standpoint, I wouldn't be surprised if in 2-3 years we start seeing really great stories out of Ethiopia. If you talk to multinationals, they all talk about Ethiopia.
Do they talk about it, or are they in Ethiopia?
They are trying to get into Ethiopia. Still very difficult to get into Ethiopia. But once you have the power situation sorted out, you start having FX revenues, which is one of the big issues in Ethiopia. And all that will fuel growth. So I think Ethiopia will be a great place to be, and can easily be the darling of the market in 2-3 years.
Focusing on the East African community, Rwanda continuously comes forward as one of the most competitive environments. Have you been to Rwanda recently?
Not in the last 6 months, but yes, I've been there. Rwanda is a great example, and is a great example of how an open economy can benefit the small economies. Obviously, if they were not landlocked and all that, they would have different tools to play with. But despite that, they are doing the right thing, and more than that, they are driving the whole Eastern Africa community behind them. And if you look at Africa, East Africa is really the good spot right now. And going back to your previous question, if you look at GDP growth, everybody got affected, but people in West Africa down to 3-4%, in Southern Africa down to 1-3% of GDP growth, Eastern Africa slightly down from 6 to 5, now back to 6 to 7. The reason is simple: it's a net importer of energy, a net importer of oil, and in a few situations, I think the policies have been right. I'm not exaggerating because I think there's some mistakes there, but overall has been doing better than the rest of Africa.
How do Tanzania and Uganda compare to Rwanda?
They have the benefit of size, of population. I haven't seen the political drive that we see in President Kagame. Certainly not in Tanzania and in Uganda.
But we've got a new president at the helm in Tanzania.
Absolutely. Tanzania, I think there are good reasons to be hopeful. You can see already some significant change, a new drive, effectively a new, I would nearly say, new generation coming to power. So I'm very positive on Tanzania. Uganda, it's not so obvious to me. It's obviously more landlocked, is about to become an oil producer and an oil net exporter. So this is not great days for them.
It's not great days to suddenly discover the oil story when the oil price is languishing at around $30
and the problem is
in
some countries, and Uganda a little bit, not as bad as other countries, they spend the oil money before they actually get it. And that creates problems that we see across Africa.
So my final question. Let's say I give you $100 million US. Does that sound like a sizable amount? 100 million US dollars?
You can play with that, yes.
All right. Now, I give it to you. What are you going to do with it, given your knowledge of the African continent?
I will invest in Nigeria, in a fast-moving consumer goods business in Nigeria.
Well, that sums up the opportunity on the African continent. I've been speaking to Miguel Azevedo, who is head of Citi's investment banking division in Africa, ex-South Africa.